20 minutes, I'm going to unmute everybody so that you can ask your question and we can proceed from there. So that is that about that. So for those of us that we are raising up our hand, Mr. Jelil Adedoja and Mr. Obafemi, please let's put down our hand so that we know that nobody is asking a question this night. So I'll be the one to read the question for us so that everybody will be on the same page. And please let us listen attentively. And before I proceed, I said last week that this advanced audit and assurance need our technicality, our professional judgment, and sometimes the answer does not go directly with what we know or what we know the answer might be. So sometimes it might require us to use our professional judgment. What I'm saying is that there are some circumstances that the answer that we know that we know that they are asking us might not be directly related to that question. Might be maybe some part of that answer, like if in the question they ask you about what is an auditor's report, for example, the content of auditor's report, and you know we have about 8 or 9 elements. So if some question might not warrant you to state all those 9 elements, it might not even be peculiar to the question they ask you. It might be just 2 or 3. So in order for you not to deviate from the normal standard or the normal way to answer the question, so it's best for us to understand the scenario very well before we can answer any question. What is the scenario asking us? What is it asking us to prepare? So that is when we can now uh, answer the question correctly. So last week I gave us 4 tips to answer any question professional this AA for as a case study. So number one is to understand the scenario. Definitely you are going to see the scenario. They will make reference to some companies or the name of a client. So we need to understand what goes on with that client or with the company and why did they need the work of an expert or a practitioner, which is an auditor or an accountant, as the case may be. So that's what we want to understand on that person, that we need to understand the given scenario very well. It is very, very important. So number 3 is to understand the requirement. After the scenario, if we understand the scenario perfectly, we'll be able to guess and have at least 50% idea what they are going to ask us in the question they are going to ask us. So what we need to do is to understand the scenario, then we understand the requirement perfectly. So after that, the next thing is to link our answer to the given scenario. In everything we want to be writing, we have to try as much as possible to link our answer to the given scenario because this exam is two-leg option. So one is to understand what you have to write about and ability for you to write very well. Then the second leg is to how are you linking, how are you referencing your answer to what they ask you. So if you are not referencing your answer to what they ask you, it will be very, very difficult for you to know what to write and to get the full mark. So please, it is very, very important. Then the last one is time management. So once we understand all these things, we'll be able to move at pace. So please, can you hear me very well? I can hear some people, they said the audio is not going well. Can you hear me very well? Please, if you can hear me very well, let me see your emoji. So who are these people that are saying my audio is cracking, this one, that one, really throwing me off? I think a lot of people can confirm that they can hear me very well. So if you are not hearing me very well, please uh, uh, leave the class and join again so that you can hear me very well. So let us proceed. So I'm going to read out this question for us to be very, very fast. Please don't forget everything you want to be writing in this AA. Let us understand our scenario very well. Because it starts from this scenario. If you did not have interest in the scenario, so you are likely to miss some information that will help you to answer very well. So I will read the question for to us, then I will try as much as possible to interpret what the question is telling us before we now start answering the question. So let's go. Question number one. It said Anything Goes Microfinance Bank Limited was incorporated in 2008 to meet constitutional needs of low-level customers. Manager, the management account of 2020 said that it revealed that the bank has a shareholder fund of 2 billion, total assets over 5 billion, and customer deposit of 2 billion. Okay, it is the largest microfinance bank in crypto. Today, the bank continues to be the banker, to be the core bank for small and medium scale enterprises and account over 70% of the turnover in crypto. That is, crypto is the area or the environment where the company operates. You can call it maybe a community. So that is where company operates. Then it is the only leading bank really owned by crypto shareholders. The bank directors are elected by each shareholder and it represents all shareholders both in the public and private sector. The bank currently has a total employee establishment over 350 with like Federation of Economic and Globalization of the bank embraced the new challenges by becoming a commercial bank in 2020 and changed its name to Anything Goes Bank Limited. The change of chief executive officer and the management of Anything Goes Bank Limited of Anything Goes Bank Limited. Okay. Change of executive and the management of Anything Bank Limited in early 2020 ushered in a new era where new ideas are adopted and others reclaiming Nigeria's responsibility. The main objective then come up with innovative business strategy that will ensure the bank serves its core customer effectively. However, the reposition the bank embarked on reviewing its corporate strategic plan, which builds on existing strengths, specifically addressing growth and development, information technology, and business management, enhanced service delivery, profitability, and capital growth. The strategic plan for the bank has been drawn up with dreams managing for value. The strategies are based on four perspectives: people, customer, financial performance, risk, and control. The goal of the plan is to ensure that the bank meets shareholder expectations, provide the bank with a common language and clear understood objectives, guarantee satisfaction to choosing customer segments and business partners. If a of this will result in customer satisfaction, efficient and effective processes, motivated and time. Okay, so that's it. And prepared staff. The effort to ensure it continues to be relevant. Can you hear me very well? Some people are saying come down. Can you hear me very well? Is the audio okay? Okay, really.
At all, it's not okay, sir. We can't hear you. It's just your voice is cracking. I don't know whether it's your
I'm not
network
sure
or
it's the
something
network.
else.
I don't know. Maybe just this can be the network. I'm sure this can you hear me now? Can anybody hear me now? Is it okay now? Please, can you hear me now? Okay. Okay. So I can proceed, right? Where do I stop?
Now,
Okay, since everybody can hear me now. So please just I want to since everybody can hear me now. Please, can you hear me now perfectly? I want us to respond. That is why I've omitted this thing. Please
Yes, sir.
we
Yes,
can
sir.
hear you, sir. We
Yes,
can
sir.
hear
Yes,
you
yes,
Hear
sir.
you.
We
now.
can
Hear
hear
you.
you,
yes,
sir.
We can hear
Yes,
you.
sir. We can hear you.
but
Can hear
that's
you
the
now.
problem now. Including my different
Loud and clear.
things. Okay, what's that? Can you hear me, please? But me, I can't hear anybody. I don't know if anybody can.
We
Can
can
hear
hear
you.
you.
Hear
We
Don't
you.
hear
can
you.
hear
We
you,
can hear you
sir.
now.
We
Mm.
can hear you.
We can hear
We can
you.
hear you, sir. We can hear you, sir.
I hear
We
you
can hear
too.
you, sir.
We can hear you clearly,
Please?
sir.
So I want to start from this. Please,
We
I'm
can hear
sorry.
you, sir. Let's just
I'm
continue.
sorry.
We are hearing.
Can
So
hear you.
the bank. Okay, so the bank in an effort to ensure it continues to be relevant and meets the needs of customers, believe it needs to revisit the operating structure and expand its business. The bank is interested in becoming globally acclaimed commercial bank in Africa. Management believes a review of approach to strategic change practice and performance be dynamic. Performance must be dynamic, particularly when confronted with discontinued and turbulence in its operating environment. Its operating environment. The review of operations shows that the environment in which anything goes bank limited exists and with which it interacts is increasing in complexity and the rate of change is accelerating. There is increasing pressure to perform from the government, public, and other stakeholders. To attract foreign investors, the bank is interested in any operating, but the software in place cannot drive the volume of transactions being processed currently. Most of the staff are not skilled enough with international financial reporting standards, especially in complex accounting issues on financial instruments. The tax audit just been conducted, and it has been back duty assessment. Okay, just concluded. Okay. Just conducted and it has been back data assessment and other queries to be sorted out. Added to this, the bank is affected by efficient service delivery, people distrust for banking sector, which corporate governance and structure and rising bad loan. The bank manage the bank's management has prepared a master plan which contains grant strategies such as product development, market development, turnaround and joint venture strategies. To facilitate the achievement of this grand strategy, functional strategies, namely marketing, operations, organizational and management, and financial strategies are also detailed in master plan. It attributes a myriad of public block to successful implementation of the strategies, including government policies, poor leadership, limited IT capacity, lack of funds, staff capability, and supporting corporate culture as main challenges. Okay. As main challenges, the bank has an audit committee but has not been the bank has an audit committee but has not been performing optimally because the operation is not properly structured. It is also in array of some of its reporting requirements. At this stage, it's paying appropriate fine to regulatory authority. Although the bank believes it's still in a small bank, it requires an auditor to examine the book of accounts with view of expressing an opinion. Management is concerned with the need to change its auditors because of the transition to commercial banks. And it has decided to send out request for proposal for appointment of new auditors. The bank has been facing delay in rendering attestation assurance report to regulators for which it has been paying fines. One of your friends, whose father is the management staff of the company and a student of accountancy, has intimidated intimidated you of this development and asking you to provide some explanation to enlighten management before they send out proposal for audit services required. Discuss the key features needed in an audit report which should be included in proposal for audit service of anything goes bank limited. Explain the type of assurance services that the auditor of the bank should provide. Use the duty of the audit committee of the bank ought to perform. Distribute among audit, assurance, and attestation engagement. So, my dear, please can you hear me? Please let me see your emoji if you are hearing me, please, so that I can proceed. Thank you so much. Thank you. So, this question, let me try and quickly summarize this my passage. So, anything goes microfinance bank has been in operation since 2019 and they have been having issues, they are paying fines and their corporate structure, they want to now uh, make their transaction because of the complexity of their transaction. So they want to move from microfinance bank to full-fledged commercial bank. So their account has been delayed because there is no proper accounting record that that they need to show to the new investor or the shareholder, and which is making them to pay fines to the higher authority. So now they need the work of a practitioner. Now, so in that they need the work of the practitioner. So they want to send out a proposal. A proposal is you coming, you writing up that, oh, we can do audit service for you, we can do accountancy service for you as case may be. So this anything goes bank limited now offer out a proposal to any audit firm to write them a proposal. So by writing them a proposal, they want to know what is the requirement, what is going to be the content bearing in the auditor's report. You know, the management is interested in the auditor's report. Yes, the class is recording. Yes, the class is recording. It's good. We are recording the class now. Abi? Yes, the class is currently is recording. Thank you. So they sent out, they reached out to you that you as a practitioner, please tell us what are the things we are going to be expected from these people that will give us proposal. What are the things, the content we'll be expecting from these people that will write proposal for us? That is, we are saying that what are the what are the things that is going to be present in auditor's report and going to be contained in the proposal of anything goes bank limited. This is what you are saying, yes, sir. This is I want to sell a product to you. I'm running, I am a small consultant and I need a new client. I'm going to write a proposal to that client that, oh, just like I'm telling myself out, this is what we are going to do. This is what we do. This is what we do. Can help you to do your, to help, you can help your company in keeping accountancy service to file your tax, you'll be your tax consultant. our proposal is going to state all those things. But this proposal, the management or the shareholder of anything goes back to their ultimate priority is what is going to be in the auditor's report. So they are telling us exactly this question is indirectly asking us what are the contents of auditor's report. So this is what the question is telling us invariably, that is before the key features needed in auditor's audit report, which should be included in the proposal for audit service of anything goes back to the state. So the question is telling us invariably the content of auditor's report. We all know the content of auditor's report if you want to write. The content of auditor's report uh, does not uh, goes beyond the title page, the date, the management responsibility, the auditor's responsibility, the key audit matter, all this stuff. These are the elements of auditor's report or key features of auditor's report. But in this regard, it is going to be wrong of us to start by listing or by telling them the features where we are going to start with. Okay, in auditor report, we're going to start with date, then the title page. Professionally, it is going to be wrong to start with that because generally, when you want to give a report, all those things will be stated in. So, we now want to give them the comprehensive features of auditor's report that will be present in the proposal that we are going to write for service of anything goes back limited. So, if you want to answer this question, it is very, very simple. The first thing is to give them the meaning of auditor's report. The reason being that we assume that the examiner, the marker, is a neutral man. The marker does not have any idea about the auditor's, about anything that has to do with auditor's report. So it is very, very important for us to give them the meaning of auditor's report. Then we now proceed to the question they ask us with the proper preamble. So, my honorable member of the class, if you want to give them the meaning of auditor's report, the best thing to start is to give them a proper meaning of auditor's report. So auditor's report can be defined as a document. Please, I hope everybody is hearing me. I hope I'm audible now. I hope there is no problem now. Please let me see your emoji if you can hear me perfectly. I hope you are flowing with the class. I just need your response so that I will know. Okay, thank you. So auditor's report, I will be fast about it. There's no need to ask us the meaning of auditor's report. So I will just be fast about it. So exactly in the next 20 minutes or thereabout, I'm going to unmute everybody. Then I will ask, then you raise up your hand if you have a question so that we treat it and we'll proceed as we proceed. So I'm going to finish that number 1A first before I will now open this thing for any question. So they said we should discuss the key features needed in audit report. That is the element of audit report. But it is very, very important for us as a professional to give them the meaning of auditor's report. We assume that the marker does not know what is auditor's report. So our small understanding will be an eye-opener insight to what the marker is going to make clear when we want to start marking our paper. So auditor's report can be defined nothing other than a written document provided by an independent auditor. Provided by an independent auditor. Provided by an independent auditor on the financial statement of an organization. On the financial statement of an organization. To give an opinion or to express an opinion on the financial statement prepared by the management that is of transparency and it is fairly presented and it is free from material misstatement. I can say again, an auditor's report is a written document that provides an independent opinion. Let's put it that way. Can be defined as a written document that provide an independent opinion on what on the financial statement of an organization. Auditor's report can be defined as a written document that provides an independent opinion on the financial statements of an organization. Full stop. You can also continue to say that it expressed the auditor's conclusion about whether the financial statements are presented clearly and in accordance with applicable financial reporting framework. I'll take it again. Auditor's report can be defined as a written document that provides an independent opinion on the financial statements of an organization. It also expresses the auditor's conclusion about whether the financial statements are presented clearly and in accordance with the applicable financial reporting framework. With this, I've given us two definitions of auditor's report. So I'm sure we are up to that now. Our understanding of auditor's report, we can give them as much as possible definition based on your understanding. So I'll start by these two. Let me take the last one very well so that we understand it. It is comprehensive and detailed enough. I said, auditor's report can be defined as a written document that provides an independent opinion on the financial statement of an organization. And I said, it also expresses the auditor's conclusion about whether the financial statements are presented clearly and in accordance with applicable financial reporting framework. That is auditor's report. Now go back to our question. After that definition, we now continue the next paragraph. Now says, however, the following are the key features that will be needed in an audit report, which will be included in the proposal for audit service of Anything Goes Bank Limited. You can see I said that the first this is to understand our scenario from the tip. I said understand the given scenario, understand the requirement. Then number two is to do what is to link our answer to the given scenario. You can see that from my definition, after my definition, and I made a paragraph. I said, however, the following are the key features needed in an audit report, which will be what included in the proposal for audit service of Anything Goes Bank Limited. You know, start right. I said, however, the following I now want to discuss now on what I said the following are the key features in an audit report, which will be what included in the proposal of for audit service of Anything Goes Bank Limited. So you now start to write that what is the content of that auditor report. So the content now include that for any given the definition that the written document that give an independent opinion about the what the financial statement of an organization. We also said it also expresses what. I'm just trying to recap. I also said it also expresses the auditor's conclusion and whether the financial statements are presented fairly and in accordance with what financial reporting framework. Okay, so now said that the following are the key features that need to be present in the following are the key features needed in an audit report, which will be included in the proposal for audit service of Anything Goes Bank Limited. With this, I'm about to link my answer to the given scenario. So then, the content, one of the major features that the auditor's report is going to give an opinion whether the financial statement is of true and fair view and it is whether it is of true and fair view, clearly presented, free of material misstatement, and prepared in accordance with applicable reporting framework. Then, however, one of the content is number one, independence of an auditor. That is number one. That is the one of the key features of auditor's report is that it's going to show the independence of an auditor. That is, it's going to explain the position of an auditor to the organization. That is, the auditor must be independent from the director. That is, the auditor must be independent from the director. Otherwise, his report will not be relied upon. So one of the key features is auditor's independence. That is, The auditors must uphold its independence, and auditors must be separated from what from the director. That is, he or she must not allow the he must not be threatened, or he must not do anything that will compromise his decision in giving the opinion on the financial statement of that particular organization. What we are saying is essence that the independence of an auditor, that this auditors must be independent. It must not be threatened, and he or she must not allow his decision to be compromised because of the management that objectivity. They are talking about objectivity here. If they are talking about the independence of an auditor, objectivity, auditor must be able to give his opinion without fear of being intimidated by the directors or the management of an organization. One of the key features that also be presented is true and fairness of the account. That is, the auditor's report will also show the trueness and fairness of the financial statement of that particular organization. That is going to show with the auditor's report, the opinion is going to be that the financial statement of an organization is of transparency, and it is fairly presented in accordance with applicable financial framework. That is number two. Number one is auditor's independence, which is also present in the normal element of auditor's report. Number one is auditor's independence. Number two is trueness and fairness of account. That is, audit report will also show the true and fairness of the account. Number three is materiality concept. That is, in accordance with auditor's report, that is going to give opinion on whether the financial statement is presented fairly, and in all material represent the financial position and performance of the. That is, materiality concept here. It says that under the auditor's report, one of the features is the materiality concept. That is, the auditor's report will also show the fairness and truthfulness of the financial statement of an organization, that all accounts have been prepared fairly in all material respect to the financial statement of that particular organization. That is, in all totality, in accounting information, for accounting information, that is, it has been embedded and prepared in the financial statement of that particular organization. Clearly, that is. So when we are talking about materiality, that is, the financial statements have been prepared clearly, and it is of transparency in all materiality in respect to that particular financial statement. That is, that is one of the features. That's one of the key features. It said the key features. That's one of the key features. Number four is the management responsibility. That is, the auditor's report will also show the management responsibility of an organization. That is, the responsibility of the management to share the financial statement on a yearly basis, and also present flow to occur in the particular organization. That is, the one of auditor's report will also show the responsibility of the management. And the responsibility of the management is to what? Is to prepare financial statements of that particular organization on a yearly basis, and it must present and detect what? Fraud and irregularities on the financial statements of that particular organization. That is the responsibility of the management. So one of the key features of auditor's report is what is the management responsibility, which is to prepare financial statements on a what? On a yearly basis. Another one is there's auditor's responsibility. So the auditor's responsibility, one of the key features of audit report is auditor's responsibility. That is, the auditor's report will also show the responsibility of an auditor. And the responsibility of an auditor is what? Is to express an opinion on the financial statement prepared by the management, to give an opinion whether the financial statement is clearly presented, is of transparency, and it is fit for material restatement. So the auditor's report, the key features is also to show the auditor's responsibility, which is to give an opinion on the financial statement prepared by the management. One of the auditor, one of the key features that present in auditor's report is also pre-audit matter. Pre-audit matter is any matter that of significance to the financial statement of a particular organization, but does not relate to financial information of that particular financial statement of that organization. What I'm saying is this pre-audit matter. So I hope everybody can hear me. I hope I am communicating. Please let me see your emojis if you are following me. Okay, thank you. So pre-audit matter is one of the key features that will be present in auditor's report. Pre-audit matter, I will define, is any matter that arises or that auditor uh, uh, put out on the financial statement of an organization. It does not relate to financial information, that is, it does not relate to figures in the financial statement, but have significant effect on the fullness and fairness of that financial statement. One of the examples is revenue recognition. One of the examples of periodic matter. As an auditor, during your audit review, you now find out that the way the company recognize their revenue is totally different from the normal uh, applicable standard according to IFRS 15. And that, if they are recognizing your revenue poorly, can have significant effect on the financial statement of that particular organization. It might either lead to understatement of revenue and overstatement of expenses. When you are not recognizing your revenue very well, it can either make your revenue to reduce, thereby affecting your profit, or increase your revenue, thereby come out with ambiguous profit, whereas you are not recognizing revenue very well. One of the ways that IFRS 15 to recognize revenue, that the revenue will be recognized when the customer has started enjoying the particular transaction. That is, for example, I have to build three-story building and they allocated 30 million for the three-story building or two-story building as the case may be. You are not done with the first floor. You want to go to the first story. You are done with the first. So you can recognize one third of that revenue, one third of that as your revenue as at that time, because the building is not yet complete, but you've already completed one third of what of the building. So it is that one third of that 30 million you can recognize as your revenue. So that's the example of periodic matter. Another example is inventory valuation, long inventory valuation. When you value your inventory wrongly, it can also have significant effect on the financial statement. I said again that periodic matter is they are the matter that arise or that the auditor find out during the audit review, but does not relate to what financial information in the of an organization, but have significant effect on the what on the financial statement. So I have mentioned revenue recognition, which is a major example of periodic matter. So if there is any pre-audit matter in your audit review for the period, it's going to be included in your audit report. So with this, I've given us about 6 or 7 key features that will be present in auditor's report in the proposal for what for audit service of anything goes bank limited. So with this, what I said in the beginning that it is very very wrong of us to start with title page, date, uh, uh, the auditor signature. Yes, they are part of normal audit audit report elements or features of auditor's report. But here the question specifies that the key features of auditor's report. So the key features is first of all independence of an auditor. The audit report is going to show the independence of an auditor. It's going to show the management responsibility, the auditor's responsibility, key audit matter, if any, then the materiality concept, if the account has been prepared fairly in all material respects on the financial statement, and fullness and fairness of the account the auditor's report will also show that. So these are the key features that will be needed in audit report that will be presented in the proposal for anything goes bank limited. If you have a question, you can please raise up your hand. So I'll quickly take the question for 2 or 3 people, then we'll proceed to question 1B. Okay, so Mrs. Blessing, you are the first person to raise up your hand. Please, you can ask your question now. The floor is yours.
Good evening, sir.
Evening.
So I want to know, where did you leave the question from?
Is that your question? I thought it was that question. That's your
Yes,
question.
sir.
Okay, it is May 2024. Thank you. You can put that in hand. So, Mrs. Precious, please your question. Madam, you can put down your hand. I've answered your question. May 2024. Madam Blessing, you can
Hello,
put
sir.
down your hand.
Good evening, sir.
Please.
Okay, sir, I'm having issues.
Okay. Mrs. Precious, please go
Sir,
on.
yes, sir. Please, I want you to expatiate more on materiality, as the number
On
3
materiality.
features that you gave to us.
Okay.
Yes.
So, we don't know about materiality. Materiality is one of the audit planning that auditors set auditors set out before they embark on field work. That is, we are going to do analysis of the item or the financial statement, last year's financial statement, and this year's financial statement. This financial statement has not been concluded. Last year one has been signed, it has been concluded. This year management account is nothing less what we refer to as our balance. So now we are going to compare the figures. The revenue last year was 10 million. Then in the management account this year, which is our balance, revenue is now 100 million. So it is a point for us to be careful that how come from 10 million to 100 million? That is 100% increase in revenue. So we need to do our investigation more on that revenue. That is where materiality comes. Materiality has to do with the coverage of our audit work. Are you getting me now, Madam Celestia?
Yes, I can hear you, sir. Yes,
Okay.
I can hear you.
Yes, okay, I said materiality, our scope of work as an auditor to know better or than more attention and more review. That is why we set up materiality in audit. So now,
Okay.
as regards to the auditor report, do you need me to give you the meaning of materiality in auditing, or you know about it? Okay, let me quickly give you the
Yeah,
meaning
I want to know about materiality in audit. Yes.
about the plastic. Materiality can just be defined as magnitude of omission or misstatements in the financial statement. I said materiality can be defined as magnitude of omission or misstatement or in the financial statement that could have influence in the decision making of investors, creditors, and other stakeholders. So as an auditor, we need to set out materiality. Materiality now means that our level of coverage, our extent of coverage on the review of financial statement prepared what by the management. So as I started the example now, I said to compare the revenue of last year and this year together. So revenue of last year was 10 million. This year was 100 million, is now 100 million. That is 100% increase. So we have set our materiality that okay, all the line items in this financial statement they are 2 million, 3 million, 4 million, 5 million, as the case may be. So we now set our materiality.
Yeah.
Any transaction that is below, that is 3 million and above, we are going to check for audit review. Let, for example, now the total revenue is 100 million as case may be. The total cost of sales is 5 million. The administrative expenses is 50 million. The the staff cost is now 2 million. The staff welfare is now 3 million, for example. And we set a materiality that any transaction more than 3.5 million, that is what we are going to choose as review. So in nutshell now, the revenue we are going to treat revenue because it fall under our materiality. Am I communicating?
Yes, you are.
So the revenue fall under our materiality because it's 100 million. Then the cost of sales fall under our materiality because it's 5 million. Then the administrative expenses fall under our materiality because it's what? Because it's 30 million. Whereas I said the staff cost is 2 million. So in that essence, we are not going to check our staff cost because it's below what our materiality. So now to go back to auditor's report, I said a materiality concept as regard to the key features of auditor's report. At the very help of auditor's report, it is going to show that the financial statement is clearly presented in all material respects. In all material respects. I hope you understand the way I read it. That is, with the help of audit report on materiality or materiality content, it's going to show whether the financial statement is clearly presented in all material respects on the financial, whether the financial statement is substantially and it is prepared with applicable financial reporting framework. That is in all material respects. That is no any other aspect is left untouched. That is a materiality capture the whole essence of the whole essence of material financial information if they are prepared in all material respects. That is, if they are prepared, they are reviewed in normal standard without not put aside some vital elements in the financial statement that may have significant effect later in the day. So, in the help of materiality, it is going to make the account fairly presented in all material form, that is, in all essence, that is, account is fully reviewed with a substantial figure that will not later have significant effect on the financial statement later in the future. That is materiality concept as regards to what one of the key features of auditor's report. Madam Precious, are you satisfied now? Can I proceed, please?
Yes, yes, I am. Thank you very much.
The last person is Mrs. Unit. Please, your question, man. You can unmute and talk now. If she's not there, let me
Okay,
talk.
good
Okay,
evening,
are
sir.
you good evening, man?
Yes, please. Please, I just want you to go over key audit matter, please.
Okay. Okay.
Thank you so much.
Audit matter in audit. There is significant matter. During your review of your audit, but they are not related to financial information. Financial information in the sense that they do not relate to figures presented in financial statement. Maybe under PP now we have 80 million, under statement of commercial income for revenue we have 10 million, for cost we have 5 million, administrative expenses we have 2 million. Those are the financial. Are you getting me now? Madam Yulis, am I communicating?
Yes, please.
So
Yes,
clear
yeah.
all this matter, they are the matter that also uh, find out during the review financial statement of an organization. But it is not related to financial information. However, they have significant effect. They have significant effect of what on the financial statement of that particular organization if it is not properly what it is. So See all this matter is calm in audit. There are those that are said in the auditor's professional judgment, whereas they are the most significant matter, but they do not relate to financial information. So, example, as I said, what we do revenue recognition. If the company is not recognizing their revenue, they do not follow normal procedure, normal way of recognizing revenue according to IFRS 15. It's going to have uh, significant effect on the standard in the aspect that it's either they overstate their revenue or they understate their revenue. So if they understate their revenue and they overstate their, let's assume that their revenue is supposed to be 100 million, but because they do not recognize their revenue very well, they poorly recognize their revenue. They now later state their revenue to be 20 million, and they have admin expenses and their expenses and cost of sales to be around that 50 million. Definitely the company is going to be running to is going to later run to a loss according to financial statement, because when the revenue is 20 million and your expenses is 50 million, so you're having a deficit of 20 million as loss. So that is what we now notice that if you notice as an auditor that this company is not recognizing their revenue very well, it is a pre-audit matter, so it needs to be included in auditor's report. That's one example. Impairment of assets is another pre-audit matter. So what is asset impairment? You can say asset impairment is any asset when the market value is less than the amount stated in the financial statement. I'll say it again. Impairment of asset is any asset when the market value or the fair value of that asset is less than the amount stated in the financial statement. Let's assume that the market value of an asset now is 10 million, and you reported 20 million in the financial statement. So that account needs to be impaired. That is where impairment comes. So you have that the company is not impairing their assets very well. They are not impairing their assets. It can have significant effect on the financial statement of that particular organization. So as an auditor, during your audit work, you find out that there is poor impairment recognition of assets in that particular organization. You need to bring it in your auditor's report as pre-audit matter. They will not relate to financial information, as I said, but they have significant effect on the financial statement of that particular organization. That is aspect of pre-audit matter. Another example might be litigation and claims, where it have a lot of court case. You have a lot of court case. At the end of the day, the court find you or the court proceeding does not go in your favor. You might they might ask you to pay a lot of and damages. By removing that money from your retained earnings, you going to have significant effect on that financial statement and even going concern of that particular organization. So if you notice all those things during your field work or during your audit, if you are key audit matter, so it will be included in the work in your auditor's report. Are you satisfied now, Mrs. Really?
Yes, please. But with the audit, key audit matters now, will this affect the auditor's opinion?
Key audit matter is just to to get the management aware. It's going to going to affect that. What the perfect opinion is you are giving an opinion. If the financial statement is substantial list and it is free from material misstatement, is different from periodic matter. Trueness and fairness of account is different from periodic matter. Periodic matter is what you notice that the company is not doing well and that might have significant effect on that financial statement. So you are just going to tell them this is what they are going to do, this is what we noticed during our audit work, this is the effect of this thing on your financial statement, this is the recommendation. So that is just about periodic matter. Periodic matter does not relate to figures. It does not relate like, okay, you said in your trial balance is PP, your property plant and equipment is 20 million, for example. And now the ledger they are giving me is showing 30 million. So it means that on that particular note, the account is not clearly presented like that because the trial balance management account they show me was is showing what how much? It's showing 20 million. And your DL is showing your general ledger is showing 30 million, meaning that there's a discrepancy between the trial balance and the ledger. So you can give your opinion that on this PPU, the account is not clearly presented and it is not free from material misstatement because of differences of 10 million between the DL and the trial balance. That one is different from periodic matter. That one now can affect your opinion. It can change the auditor's opinion that we can qualify this account because we have a lot of series of errors in this account when we review. So that is the opinion. You qualify that. In my opinion, as an auditor, this account is not free from material, is not clearly presented. That is your opinion. But the periodic matter does not relate to figures in the financial statement, but they have significant effect. The effect they have is if you poorly recognize your revenue, it's going to make you it's either you overstate your revenue or you understate your revenue. So there is going to affect whether you are going to be having loss or profit at the end of the financial year. So in a nutshell, periodic matter does not affect your opinion. It only relates to some non-financial information in the financial statement, but they have significant effect on the financial statement is not properly corrected. Do you understand now, Mrs. Jenny? Okay. Is it Mrs. Jenny?
Yes, thank you very much.
Please, are you satisfied now? So
Yes, I
last,
am. Thank you very much.
okay. So I'm going to just continue our. So the other people that are raising up your hand, let's please within 2 minutes, Mrs. Titu, I mean that, Abi, your question, please let us discuss about it. Okay, it's not there. Who is this other person that is raising up? Mr. Olumide, please your question, please. Is Mr. Olumide there? Okay. Mrs. Blessing Adama, are you there? Mrs. Blessing, are you there? Okay. Miss Olamide, please, are you there? You just raise up your hand now.
Hello.
Yes, good evening, sir.
Okay, Mrs. Olamide, please go on.
Okay, thank you, sir. Well done, sir. Good evening.
Good evening.
So, sir, I actually wanted to put more light on this. Okay, I just heard you explain more on key audit matter, but I need more explanation about this other matter paragraph, emphasis paragraph as well. Emphasis of matter paragraph, and like what is the difference between all these names, like other matter paragraph, emphasis of matter paragraph, key audits? When exactly are they being used? Yes, so that is my
But
question, sir.
that your question does not relate to what we are treating presently, which is the
Yes, because you just explained
I will
key
I will
audits.
answer you. So this
That was what
matter
I
does
was.
not relate to your question now. That one is just that matter paragraph that is when you, as an auditor, you have a doubt that there is going concern uncertainty due to insufficient loss. So, for example, now, you are the auditors of this company for the last 3 years, and all for those 3 years, you have reported that the company is making loss. Even your audit report shows that the company is making loss year one, year two, year three. That's the way uncertainty paragraph now come in that uncertainty paragraph means that there is going concern uncertainty that if the company continue like this without improving or making profit, there's tendency that there is a tendency that the company is not going to last long. That is going to concern uncertainty. That is where you can bring in. That is the meaning of uh, uncertainty paragraph. It's quite different from going for auditors report. Where you can issue uncertainty paragraph when it are added uncertainty paragraph is when you you are of opinion that the company is not going to uh, stay long in the market due to their poor performance, and which is thought to loss in the financial statement, or the company is making loss over the year. So it is of importance for you to issue uncertainty paragraph, matter paragraph, the case may be as you mentioned, but it is significantly and simply means that it is going to concern uncertainty, which means that the company will likely to exist in next 2 3 years because of their record now. Because for the past 3 or 4 years, the company has been making loss, have been reporting loss. That is when my matter paragraph can come in. I hope you understand now, Mrs. Olamide.
Yes,
No,
thank you.
are you convinced now? Is it okay? Can I proceed now?
Yes, thank you.
Others, this is our need to take any question again. So let's proceed so that we can cover more this night. So you can bring your question. When you have another question, please you can note it down, you put it in that chat box so it will be attended to. So let's proceed again. He said, explain the type of assurance services that the auditor of the bank will what to provide. What is assurance services? So if you want to answer this question, it is very, very simple. It is very, very simple. So now, what is assurance services? First of all, assurance services can be defined as the degree of assurance that should be provided on reliability of financial statement of a company. That is, assurance service has to do with reliability of financial statement of an organization. That is, they are giving an assurance that the financial statement is of true and fair view and distinct from material statement. So the question now is that we should explain the type of assurance services that the auditor of the bank should what to provide. So invariably talking about the type of assurance services. So we can just have two assurance services. We have limited assurance and reasonable assurance. Generally, you have to, but we just want to use this one to casual. But before we now give them the type of assurance service, it is it is important for us to give them the meaning of assurance services. So, what is now assurance services in audit? So, what is assurance services in audit now? So, before we can now give them the type of assurance services. So, I will start. Assurance services is designed to improve what the quality or or content of what of financial information in order to enable stakeholder work to make better. That is, an assurance services can be defined as a professional services designed to improve what the quality or content of financial information and reliability of financial information in order to enable what the shareholder to make better decisions. However, if you now want to answer, you've given them the meaning of assurance services. However, you now say the following are the type of assurance services that the auditor of the bank should provide in the case of anything goes bank limited. Don't forget the piece number three. The piece number three is to do what? Is to link your answer to the given scenario. So now, you've really learned the meaning of assurance services. I'll take it. Assurance services can be defined as the professional services designed to improve the quality or content of financial information and also to increase the reliability of financial information of an organization, to improve the financial content and to improve the quality of financial information, that is the financial statement. That is to in all in all to out of everything we say Assurance services can be as a professional services designed to improve the quality of financial information and also the reliability of that financial information of a particular to improve the financial information and reliability of that financial information of a financial statement in order to enable what the management, the shareholder, the investors to make better decisions. That is, you are giving them the meaning of assurance services. You now proceed that. However, the following are the types of assurance services that the auditor of the bank will what to provide to provide in the case of anything goes bank limited. You know, the way I answered, I've tried possibly I will not deviate from the scenario because they are talking about anything goes bank limited that want to change from microfinance bank to what to commercial bank. So and I want to answer this question. The question asking type of assurance services. I've given them the meaning of assurance services. The assurance services is a professional service designed to improve the quality and reliability of financial information in the financial statement of an organization in order to enable the shareholder, the investor, or the creditors, as the case may be, to make better decisions. Full stop. They now proceed that. However, the following are the type of assurance services that the auditor of the bank should provide in the case of what anything goes bank limited. Please, am I communicating now? Please, if you are enjoying the class, if you are following it, please let me see your thumb so that I can proceed. Okay. So after that, you now leave the site. You now said, you said the following are the type of assurance services that the auditor of the bank was to provide in the case of anything goes bank limited. You now leave. Number one, reasonable assurance. Number two, limited assurance. So you know reasonable assurance and limited assurance. So now, I've tried to explain what it says to be assurance services, and the assurance services will depend the result of will depend on the work you have performed as a practitioner. In all research, the assurance services always come like this. Let me quickly chip in. The assurance has it has been audited. But maybe because of the company wants to uh, want to get to them to go and invest in their company. So they need an assurance service. An assurance service is just to so sorry about that. Please, I hope you can hear me. My network just go out. So about I have my okay. So now what we're saying about assurance services, I said assurance services is nothing other than uh, an engagement given to a practitioner to review account that has already been prepared and audited by an auditor, so as to give an opinion that the account is free from material misstatement and it can be able to the shareholders can place reliance on the what on the report given by the auditor. So an assurance service is just for you to come and give us assurance on the account that have been prepared and audited by another person. Just to check on the second time, to not give us assurance, to give us peace of mind and rest of mind that, oh, this account is free from material misstatement. I hope you understand that normal layman meaning of assurance services. Please let me see your emoji so that I can proceed if you are following me. Okay, thank you. So that is that about assurance services. So according to this question, it says if you explain the type of assurance services. So and we have given them the meaning of that. They said we should give them type. But as a professional that we are, it is important for us to give them the meaning of assurance services. So they are giving them the meaning of assurance services. So we now want to give them the type of assurance services. And we said the following are the types of assurance services that the auditor of anything goes bank limited, that the auditor of the bank should what they provide in the case of anything goes bank limited. Number one, reasonable assurance, limited assurance. So the reasonable assurance now, what is reasonable assurance? The reasonable assurance is audit that provide high assurance but absolute level of assurance. That is the financial information is free from material misstatement. Reasonable assurance it is the assurance provided by what? By a practitioner with a high expectation but not absolute. It means that the account is free from material misstatement. From our review, we are able to get some one part of we selected part of financial information we review, and with that we come up with our opinion that the financial statement is of true and fair view and is fairly presented. That is, it is an assurance, it is audit assurance that provide high assurance but not absolute statement. That is, it is not the general financial statement in what we review. We review some and we're able to come out of opinion that the financial statement is transparent and it is free from material statement. That is, the service assurance provide high level of assurance but not absolute. That is, but not total. We did not what review the total aspect of financial statement. We provide high assurance that high level of assurance from selected important transactions that we pick as sample to review. And we are able to give an opinion that the financial statement is substantial and it is free from material misstatement. That is, this assurance provide what? High level of assurance, but not absolute level of assurance. That is, the audit financial information is free from material misstatement. And in this situation, the audit report is expressed in positive form. That is, in our opinion, the financial statement gives true and fair view. That is reasonable assurance. Now, limited assurance, it is the assurance that is on moderate level, but it is focused on a total financial information. That is, the transaction that we are going to pick it is on moderate level. That one is not high assurance. It is on moderate level, but it is on moderate level, but thought conclusion expressed in a negative form. That is, so the difference between the two that one is high level of assurance but not absolute. But you are still going to express your opinion that the financial statement is substantial. This report it is always given in a positive form. That is from our view, we say that the financial statement is substantial. That is reasonable assurance for you. If you provide high level of but not absolute. And it also expresses an opinion that the financial statements of transfer through what positive form. So now, limited assurance. This is this is moderate level of assurance provided by in conclusion to express an opinion that the financial statement is of what is of transparency, but this one is expressed in what in negative form. So how do you express it? You will not express that from our from our uh, from our review, nothing has come to our notice that the financial statement does not give true and fair view and it does not fit from material misstatement. You express your opinion here in negative form. The second one is a positive form, which is reasonable assurance. The second one is negative form. It is the limited assurance is moderate assurance moderate assurance services, whereby the auditor express his opinion in negative form. That is the account that is from our review, nothing has come to our notice that the financial statement is not of transparency and is not fit for material statement. You express your opinion in what? In negative form. That is limited assurance. While reasonable assurance, it is high level assurance services, but not absolute. And it is always reported in positive form. That is, in our conclusion, the financial statement is for true and fair view. That is the difference between reasonable assurance and limited assurance. So let me quickly take two questions from here so that we can proceed. Two questions, please. So if you have a question, please raise up. Let me see so that we can proceed quickly. So who is asking us questions? Okay. So let me start from this is Blessing. Isiaka, Blessing. Your question, please. We will be fast about this as soon as possible. Once I call you, you will not respond to me. I'll move to another person. This is Blessing Isiaka. Are you there? Okay. He's not there. You see to Amida. Please, welcome.
Yes, sir.
Okay, please go ahead.
Yeah, so like I was about to ask question regarding the A part. That is why you are not getting. So that what I want to ask is that can you just run me through the key features, like the list,
The key features of auditors.
like okay, the key features needed in audit reports, like just the list of it. I quite understand the explanation you give, but
The,
the list.
the key features of, according to this question, right? First of all, we have auditors.
Yeah.
That is, the audit report will show the auditor's independence. It's going to state clearly that this is going to state clearly that the auditor is independent of the director. That is not asking or is not doing anything in under the influence of the directors of the company. That is, auditors has his own independence. He can operate without being influenced by what by the director. That is number one. Number two is trueness and fairness of account. That is, auditor report will show whether the financial system is of transparency and it is free from material statement. Number three, auditor's report will show the materiality concept. That is, it's going to show that the account has been prepared in all material respects, in all material respects, and the account is clearly presented and it is free from material misstatement. That is number three. Number four, the auditor's report will show the management responsibility. That is, the auditor's report will clearly state that the responsibility of the management is to what prepare accounts on a yearly basis, and also they are also responsible for prevention and detection of fraud in particular organization. That is number four. Number five, auditor's report will also show the auditor's responsibility. That is, the auditor's report will clearly state the responsibility of an auditor, whereby the responsibility of an auditor is to give an opinion on the financial statement prepared by what? By the management. To give an opinion if the account is of fair view and it is free from material statement. That is number 5. Number 6 is key audit matter. For example, the key audit matter also needs to be presented in auditor's report. We said key audit matter, they are the matters that does not relate to financial information, but they are of high significance and they have significant effect on the financial statement. That is the key features of auditor's report as regards to this question. Am I clear? Are we clear now, ma? Okay.
Thank you very
So
much.
I want to assume that this question, this number 1 is very, very simple that everybody understands.
Yes.
Okay, thank you. So let me proceed to 1C. 1C is very, very simple. Very, very, very simple. So what is they say we should leave the duties of audit committee. We should leave the duty of uh, audit committee of the bank ought to be performing. So what is audit committee? Audit committee that the independent committee of an organization that oversees the preparation and presentation of financial statements or in that particular organization. That is the meaning of audit committee. So the next time we should say the duties of audit committee. So if you want to answer this question, you need to start that the following are the duties of audit committee of bank of the bank ought to be performing in the case of anything goes bank limited. I'll say it again. After you give them the meaning of audit committee, and I've given us the meaning of audit committee here, I said audit committee are the committee of directors and shareholders of a particular organization that oversees the presentation and preparation of financial statements and also in charge of appointment of auditors of that particular organization. That is the meaning of audit committee. So from this definition, you can think about 2 or 3 duties of audit committee. So now, if you now want to answer, after giving them the meaning of audit committee, you now say that the following are the duties of audit committee of the bank, or you say the following are the duties of audit committee to be performed, uh, to be performed uh, in case of anything goes bank limit. I'm trying to link the answer to the given scenario. That is why, because in anything you want to do, you must try. It is very, very important. You must try to link the answer to the given scenario. So what we are saying next is that if you want to answer, you now say that the following are the duties to be performed by audit committee in the case of anything goes bank limited. So one of the duties of audit committee, number 1 is to oversee the financial operation and to oversee the financial reporting and disclosure of financial statements in an organization. That's one of the functions. Number 2 is appointment of auditors. That's one of the duties is to appoint the auditors of a particular organization. That's one of the duties. Number 2, another one is to review the scope and planning of audit requirements. That's another duty of audit committee is to review the scope and planning of audit requirements. Another duty is to oversee the performance of internal audit function. Audit committee also have the duty of overseeing the performance of internal audit function. Then another one, there are many duties of audit committee. Audit committee also monitor the internal control process. That is, they also monitor and oversee the internal control process. That is the way internal control operate their processes and their functions in that particular organization. Audit committee also oversees the affairs of internal control. Another one, they also oversee the regulatory compliance, the ethics, and the whistleblowers in a particular organization. That is, the audit committee also oversees the regulatory compliance of an organization, the ethics, and the aspect of whistleblowers in that particular organization. We all know the meaning of whistleblowers. They are the people that used to report the unappropriate transaction that is occurring in an organization, but they will not let their identity to be what to be known to the public or to be known to the other staff in the organization. So one of the duty of audit committee is also to oversee the regulatory requirements, the regulatory compliance, the ethics, and the aspect of whistleblower in an organization. They also one of their duties is also to monitor the choice of accounting policies and principles. Another duties of audit committee is also to oversee the accounting policies and principles. The accounting policies to be adopted on our financial statement, the policy of an organization, or the payable policies, the receivable policies, how to charge our depreciation, the rate to be used. Audit committee is also responsible to set out all those policies, all those accounting policies and the like. So another, I think I've mentioned as much as possible. Audit committee also make recommendation to the board regarding to the appointment of what of the auditor in that particular organization, the removal and the remuneration of an auditor in that particular organization. That's another duties of audit committee. We have a lot, and with it, I've mentioned about 6 to 7, or even more than 7 duties of auditor's report. I said they help in preparation of financial statements. They recommend to the management on removal and appointment of an auditor. They also uh, make a suggestion to on the fee to pay an auditor in a particular organization. They also help in what in oversee the accounting policy and procedure in a particular organization. That's one of their responsibility or one of their duties. They also uh, they also recommend they also review the findings of management matter in conjunction with external auditors. They oversee the operations of internal control functions. They also oversee they manage the internal control process. That's another duty. Another duty is Another duty is that they also oversee the regulatory compliance, the ethics, and the aspect of whistleblower in an organization. So they also review the scope of audit and what the audit planning requirements. So these are the duties of audit committee in a particular organization as regards to anything goes bank limited. So you can give them as much as possible, but the most important thing is try and link your answer to the given scenario so that it is not like you are trying to follow one leg instead of using the proper way. You already know what to write, but your ability to link that your answer because you are just giving us broad meaning of audit committee and all. You are not linking that your answer to the given scenario. So your ability to link that answer to that scenario will give you a better edge to get a full mark in that particular question they ask you. So in nutshell, it is very, very important for us to link our answer to the given scenario. So in order for us to have a full mark, I'm sure we don't have any question on that. Any question at all? Please, if you don't have any question and so that I can continue, please let me see your emoji so that I can proceed like that. This is the last question. Hello, can anybody hear me? Okay, thank you. So I can see your emoji so I can proceed. So let's proceed. The last one now. The last one we should distinguish between audit, assurance, and attestation engagement. Okay, some people are still using the help their hand. Okay, now so number two, one the now said distinguish among the audit, assurance, and attestation engagement. So what is audit? What is assurance? And what is attestation engagement? So that's what we want to say now. So what is audit? We all know the meaning of audit. Audit can be defined as the sorry, I want to sit down very well. Okay, so what is audit now? So audit can be defined as the independent examination of company financial information, financial record, and internal to form an opinion that the financial statement of a particular organization is of fair view, clearly presented, free from material misstatement, and also in compliance with appropriate or relevant financial reporting standards. I will say it again. Audit can be defined as the independent examination of financial information, financial records, or internal control processes to ensure accuracy, reliability, compliance, and also to form an opinion on the financial statement if the account is of fair view, free from material misstatement, fair presented, and also prepare in accordance with regulatory and regulatory framework. That is the meaning of audit. Please, do you understand? Please let me see your emoji. Do you understand so that I can proceed? Do you get the meaning of that audit that I just mentioned now? Okay, thank you. So that is the meaning of audit. Now, what is please, if you don't understand, I don't know, some people they are giving their thumb down like, is it that you don't understand or I need to say it again? Please, if you want me to say it again, just type it here, not to be putting top down as if I don't know what I'm saying, or if you want me to say it again, some people are saying I'm too fast, so let me say it again. I'm not too fast because of the time, because I don't want this thing to send us out, and we still have a lot of questions to treat. So I'll take it slowly. I said audit can be defined as independent examination of organization financial information, financial record, or internal control to ensure accuracy, reliability, and to form an opinion on the financial statement prepared by the relevant from material misstatement and also prepare in accordance with regulatory framework. That is the meaning of audit. I'll take it again. Audit can be defined as the independent examination of financial information, financial record, or internal control processes to ensure accuracy, reliability, and to form an opinion whether the financial statement prepared by the management is of fair view, clearly presented, free from material mistakes, and also prepare in accordance with regulatory framework. Do you understand? I hope I'm not fast. Please let me see your emoji so that I can come. And now you are talking. Now I know that I am communicating. So all of you that you are using up down, I hope. Okay. I hope you can understand now. So that is audit. Now let us go to assurance. What is assurance? Now we have substantially said the meaning of audit. Now, what is assurance? Assurance can be defined, or you can say assurance services, any of the two. Assurance services is audit can be defined as, I think I've mentioned the meaning of assurance services before. Yes, assurance services or assurance can be defined as professional services designed to improve the quality. Right. So let me say it again. Assurance services. Assurance services can be defined as as professional services designed to improve the quality, to improve the quality of financial statements in order to form an opinion if the financial statement is of transferable, free from material misstatement, and also what and also presented fairly. So I will take it again. An assurance services or an assurance can be defined as the services designed by an professional services or the services designed to give reliability, accuracy, and completeness of financial information based on the independent examination and evaluation of financial records in order to report to the shareholder that the financial statement is of true and fair view, free from material misstatement, and fairly presented. I will say it again because I know some people will be giving me thumbs down. Let me say it again. An assurance or assurance services can be defined as professional services designed to boost the confidence of shareholder or the directors of an organization that the financial statements prepared and audited by another person is accurate, is reliable, is uh, is complete, and the account is prepared with true and fair view. It is free from material misstatement and also what fairly presented. Please, do you understand? Or should I let me be more elaborate? Please, if you don't understand, let me see your emoji. If you understand, let me see your thumb up so that I can proceed. But if you don't understand, please let me know so that I can repeat it again. Okay, let me say it for the last time. So for yes, I would say for those of us that are raising up their hand. So after this one, I'm going to entertain question before we now go to question number 2. So I would say assurance services. Let me say it again. Or an assurance can be defined as the professional services designed. An assurance services can be defined as the professional services designed by an independent auditor to give an assurance on the financial statement prepared and audited by an independent practitioner to form an opinion that the financial statement is accurate, is reliable, and the information therein is complete, and to also give an opinion that the financial statement is of transparent, free from material misstatement, clearly presented, and also prepared in accordance with regulatory framework. The difference between audit and assurance is the assurance it is giving level of confidence, reliability, and completeness on the account that has already been prepared and audited by another person to give opinion to the management that the financial statement is of true and fair view and is free from material misstatement. Assurance services and auditing When you are auditing, you are giving your opinion. That is, you audited the account, you are giving your opinion. If the financial statements of trust. For assurance services, the account has been audited before. The opinion has been given to the shareholder, but they now call you upon you as a practitioner to come and give us level of assurance, to come and state that is, to come and give us confidence that the financial statement prepared and audited by a practitioner is of true and fair view, it is free from material misstatement, it is fairly presented, and also prepared in accordance with regulatory framework. That is assurance. That is, you are giving us confidence that this assurance, this account that have been prepared and audited is of true and fair view. So let's use the assurance in a real life. Like you, your oga gave you assignment in the office to write a proposal. So after finishing writing the proposal, before you submit it to your oga, you now give it to your colleague. Please, let me review this account. Let me review it. You know you've already prepared the proposal very well, but you now give it to your colleague to help you review it. The essence of giving it to your colleague is to give you that reasonable assurance that you will not make mistake in that proposal that you write before you present it to your oga. So that process of your colleague reviewing that account and was able to come out with the same level that you used to prepare the proposal, the proposal is okay, there is no error, there is no mistake. That is the same level of assurance the practitioner is giving to the shareholder that the account that have been prepared and audited by this practitioner is of true and fair view and it is free from material misstatement. That is assurance. Please, do you understand? Please let me see your emoji if you understand. I'm sure this one is clear enough before I now move to attestation engagement. Yes, thank you. So finally, what is attestation engagement? Attestation engagement is the type of okay now. So I want to explain attestation engagement. Thank you, everybody. I want to explain the meaning of attestation engagement now. So attestation engagement can be defined as a type of professional services where practitioner, that is either the accountant or the auditor, provide an independent opinion or conclusion that the reliability of subject matter or of an attraction. Okay, this is the difference between assurance and attestation engagement. Attestation engagement, we said this is a professional services. A professional services where a practitioner, either the accountant or an auditor, provide an independent opinion or conclusion about the reliability of subject matter or attraction. Attraction means that the method you use. So an attestation engagement is that a practitioner is now engaged that to give to give an independent opinion on that the method used to prepare and audit this account is authentic, is accurate, and it is completeness, so that therefore the account is of true and fair view. I'll say it again. Attestation engagement, we said it is a professional services where a practitioner, either the accountant or an auditor, provide an independent opinion or conclusion about the reliability of subject matter or attraction. So that is it is a professional services either by an accountant or an auditor to provide what an independent opinion or conclusion that the method Sorry, don't be angry with my network. I'm back now. Can you hear me now? Please let me see your emoji if you can hear me so that I can proceed. Okay, thank you. So, I want to start from attestation engagement. I've explained, I know I've substantially explained the meaning of audit, the meaning of assurance. Now, attestation engagement. So, attestation engagement is a type of professional services where a practitioner, either an accountant or an auditor, provide an independent opinion or conclusion about the reliability of a subject matter or an assertion. I will now expatiate it. That is, it says that it is a professional services rendered by what? By an accountant or by an auditor to provide an independent opinion or conclusion that the strategy, the method or the way in which the financial statement is being prepared and audited is of transparency. It is free from material misstatement. It is fairly presented, and it is also prepared in accordance with relevant laws and regulations. So, and attestation engagement is a professional services whereby the practitioner give what? An independent opinion or conclusion on subject matter or an assertion or a method or strategy used. That is, you are giving an opinion that the strategy, the method used in preparation of this financial statement is accurate and reliable. Thereby, the financial statement of that particular organization is of trustworthy and it is free from material mistakes. So that is difference between audit, assurance, and attestation engagement. So let me see your emoji if you understand me perfectly. Then I can now open a link for questions. I know people will ask. So our question, please. Our question. Okay. So who is asking us? It is Power Opeyemi. I hope your question is relating to this. So
Yes, sir. It
it is
is.
Power. Please go on.
Good evening, sir. Yes, sir.
Good
I
evening, ma.
observe we mentioned assurance service and assurance engagement interchangeably. So I want to confirm if it is the same thing, like if assurance service is the same thing as assurance engagement. That's my question. Thank you.
Yes, assurance services is the same thing as assurance engagement, but different from attestation engagement. Attestation is to come and attest, to come and support, to come and conclude that, oh, this method they use is correct. That is attest. Assurance is to come and give us level of reliability, level of confidence that this account that is prepared and audited by this particular person is of trustworthy and the company can place reliance upon it. That is assurance services. You are giving them level of assurance, level of confidence, level of reliability that, oh, you can rely on this information or on the report given by this particular auditor on the financial statement of an organization. You know the account has been prepared and audited, but they now call you that, please come and give us assurance service, that is, come and give us level of reliance that or level of confidence that this account that is prepared and audited by this particular person is of trustworthy. That is assurance services. While audit is independent examination of that financial statement of an organization to form an opinion whether the account is of trustworthy, free from material misstatements, fairly presented, and also what prepared in accordance with regulatory framework. That is different between audit, assurance, and attestation engagement. So different the audit is you are giving an opinion afresh on the financial statement prepared by the management. Assurance services, you are giving level of confidence, level of reliance to the management that the account prepared and audited uh, by a practitioner can be placed reliance on, thereby the account is of true and fair view and is free from material misstatement. Attestation engagement, it is a professional service by either an auditor or an accountant to give an opinion or conclusion on a subject matter or attraction. That is to come and give a conclusion or opinion on the strategies or method used in preparation and presentation of financial statements of particular organization. That is different between audit, assurance services, and attestation engagement. However, assurance services and assurance engagement, they are the same thing. Just like they are asking you, what are the features of audit report and what are the elements of audit report? They are still the same thing. Madam Okoyemi, do you understand now, ma? Hello, Madam Okoyemi,
Yes,
you
sir.
have
Thank you,
disappeared.
sir. Thank you. I am here.
Okay, so Mrs. Blessing, your question, please, before we proceed to the next question. You raise up your hand, Mrs. Blessing. Okay, she's not there. Please, my professional colleague, that is that about question number one. Please, if you understand this, the way I explain and it actually add value to you, please let me see your emoji so that I can proceed. I know that everything I've been saying it is well presented. So I will say it again. Let me just do the recap on that question number one. The first one is talking about the key audit matter, the key features of auditors report. Then we talk about the auditor's independence, the materiality concept, the responsibility of the management, the key audit matter, responsibility of auditors, the trueness appearance of financial statement of accounts. Then that is the key audit, the key features of auditors report. I think that is the features that is what you are likely to see in an auditor's report. Then number two has to talk about the type of assurance services that is associated with the company. But don't forget that you should always uh, give your relate your answer to always give your relate your answer to the given scenario. That is anything you want to say, please always remember to put the name of that company you mentioned in your answer to make it more presentable. So the one we talk about the type of assurance services where we talk about the reasonable assurance and limited assurance. The reasonable assurance, we said it is high level of assurance, but not absolute. And the report is always given in positive form. That is, from our conclusion, the account is of transfer due. While limited assurance is moderate level of assurance, and it is moderate level of assurance, and it is always presented in negative form. That is, the way you present it, that from our conclusion, nothing has come. That is, nothing has come to our notice that the financial statement is of transfer, is not of transfer view, and it is not free from material misstatement. That is that about 1B. Then 1C talks about the duty of audit committee, whereby we give them the meaning of audit committee as the committee of director and shareholder that oversees the preparation and presentation of financial statements of an organization, oversees the internal control processes, oversees the internal control functions, subject to the management appointment, removal, and appointment and removal of an auditor. They also act as watchdogs on the internal control. They ensure that the account is fairly presented and it is applied with applicable regulatory framework. They also assist in choosing appropriate accounting policy and procedure to be adopted by an organization. So that's that about the meaning of auditors, audit committee and audit report. Then lastly, we talk about the meaning of audit, which is independent examination of financial statement. That is the key meaning here. Independent examination of financial statement of an organization in order to form an opinion if the account is transfer view, free from material misstatement, clearly presented, and also prepared in accordance with regulatory framework. We talk about assurance services or assurance engagement is uh, uh, is a professional services by an independent auditor to give a reasonable assurance or reasonable uh, assurance and conclusion that the financial statement uh, prepared and audited by a practitioner can be placed reliance on, thereby the accounts of strong service. While the last one is attestation engagement, which is a professional services rendered by either an accountant or what or an auditor to give an opinion or conclusion on what on a subject matter or an assertion or is a method or on a procedure or a strategy used in preparation and presentation of financial statement to give an opinion when the account is of true fair view and to seek on material statement. So that is that about the answer and the overview of question number one. So Mrs. Okoyemi, you were raising up your hand before. Okay, so let me give you chance so that you can talk and we move to question number two. Please, you have the floor now, ma'am. Madam, you can talk so that we can proceed. I've already. Hello, Madam Okoyemi, please go on. The time is going. Please go on. You can ask your
I'm
question
with
now.
you. I'm with you. Under the type, can you hear me now?
Ma'am, please
Under
go on.
the type of assurance service, you mentioned reasonable and limited, but
Yes.
in the I don't know. I'm also seeing type of assurance service. I don't know the one that is correct. Like the engagement that is relating to risk assessment, that is relating to performance management, the type of assurance service that is relating to value for money, and the one that is relating to system reliability. So we don't know the. I don't know the. Is it
Those
this
are
one
the
that is type of?
those are the examples of what you can check. That one goes to everything. But they said the assurance services, the assurance services that auditor of the bank provide, auditor of the bank. That's why I said, if you remember from the beginning, I said most of our answer does not go directly with what we know. Most of our answer goes with the scenario they give to us. Because that one now is not the general example of assurance services. If that one, you cannot categorize that one whether it is reasonable or limited. Do you understand? But that one, they are the examples of assurance services or, or mode of assurance services.
Thank you,
But the
sir.
type that we have is just reasonable and limited. However, all those ones that you mentioned, they are the other scope or mode of assurance services whereby you want to do assurance services on what do you mention is now? Mention one of it on risk and what?
On risk
Hello,
assessment.
Mrs. Ope.
On risk
On risk
assessment, I'm
assessment.
with you.
As if you want to do assurance services on risk assessment. Risk assessment that the risk has been assessed by a practitioner before. So you want to give level of assurance to the management that this level, the method of risk assessment used by this practitioner, can we place reliance on it, or we can use another risk assessment so that you don't have significant effects on the financial statement. So all those things you mentioned, they are the examples of assurance engagement. That is the way or in which you can give assurance services. That is on like, or you can say the mode or the sections of assurance services that you can do is whether on risk assessment, whether on performance measurement of an organization, as the case may be. But the types of assurance services, they are reasonable and limited. While other ones, they are the examples, that is the areas of assurance services
Mhm.
you can do for your life. Do you understand now, man?
Yes, sir. Thank you, sir.
If you don't understand, please, I have a whole time to explain to you. Are you convinced enough, man?
Yes, sir. Thank you, sir.
So, Mr. Latisi, you raise up your hand. Let's hear you so that we can proceed to question number 2.
Yeah, good evening, sir. Sir, please, I would
Yes, sir.
like you to help us differentiate attestation engagement and statutory engagement.
Statutory engagement or statutory audit.
Yes, statutory audit and attestation.
Attestation. Okay.
Yes.
Statutory audit, let me say it again so that you understand. Statutory audit can be defined as independent examination. Independent examination of financial information, financial record of an organization to form an opinion, whether the financial statement is reasonable, is accurate, is complete, and to also form an opinion whether the financial statement is of true and fair view, free from material misstatement, fairly presented, and also prepared in accordance with regulatory framework. Do you understand that one? That is statutory audit, or that is
Yes, sir.
general meaning of audit. Is that one clear,
Yes,
sir?
yes, sir.
Okay. Attestation engagement. This attestation engagement, if you are not doing statutory audit, that is, the audit has been conducted by an auditor, you are asked to come and do attestation engagement. That is, we now say attestation engagement is the professional services rendered by either an accountant or an auditor to form an opinion or to form an opinion on the subject matter or assertion or strategy or method or the way used in preparation of financial statements, if they are reliable, accurate, and they can be placed reliance upon. That's the attestation. You come and attest, to come and give me level of reliance that this account or this method this strategy they use in preparing this financial statement is okay. Anything they said attestation engagement, it has been done by another person before, but they just call you to come and give us level of assurance that this method they use, is it okay? Can we place reliance upon it? I hope it's not going to have significant effect on the financial statement later in the future. That is why they engage you as attestation engagement or as either an accountant or an auditor to come and give what an attestation on the subject matter. Do you understand now, Mr. Alasiki? So there are two
Yes,
different things. Are you satisfied with the explanation, sir?
it's all right, sir.
Thank you. So, Mrs. Folasade, please, we need to go to question number 2. We need to proceed. So, Mrs. Folasade, let's hear you quickly.
Yes, sir. Good evening, sir.
Please, ma'am.
Thank you very much. I actually understand, but my concern is with this attestation engagement and assurance services. Both of them are professional services that is checking what has been done before. So I'm not seeing the difference between two of them.
The difference is very, very clear. And assurance services, you know, the difference is attestation engagement is you want to attest on the method, the strategies, or the ways they use to prepare the account. If the can place reliance upon it, and if to form an opinion that it does not have significant effect on the financial statement and the account is of transfer and free from material misstatement, you come to give us attestation, to come and give us level of reliance on the strategy, on the subject matter, particular matter, or the strategies they use in preparing that account. Do you understand that one? That is attestation engagement.
Yes.
Why assurance services, it is also a professional services. by rendered by an accountant or an auditor to come and give. This one is not on the method or the subject matter. To come and give
Okay.
assurance on the financial statement as a whole. But the account has prepared and audited by another person. But you are called upon to come and give level of assurance to on the financial statement prepared and audited by a practitioner to give an assurance to the world to the shareholders that the account prepared and audited by practitioner is of transparent view and the shareholders can place reliance on it on such opinion. That is assurance services. Can you see the difference now, ma? One is on
Yes.
the strategy they use to prepare the account. That is the attestation engagement. Why
Yeah.
assurance is on the financial information as a whole.
As a
You are
whole.
now reporting to the shareholder that, oh, the information supplied to you by Mr. A before is good. You can place reliance on the information. That is assurance services. Do you understand now, ma?
Thank you very much, sir. Yeah, I do.
Let's
Thank
go to number 2. So please, if you are following and enjoying the class, please let me see your emoji so that I can proceed. It's like you are giving me go ahead to proceed as you are enjoying the class. Please feel free. Before the end of this class, I'll still tell us what we need to do because audit is not like advanced task that you just come to the class and this figure is like this figure is like this one is a liable expense, this one is not a liable. This one is a real practical exam whereby they want to test our professional intelligence. If they want to see that if this thing is happening to you right now, what will you do in this situation? That is what this audit is all about. That is why most of us we find it difficult to scale through. But I want to believe and I pray that you shall never have cause to write any of this paper again. And this diet will be our last diet in this class, attending to audit and assurance and any other course as the case may be. The next time I want to see you is to come and give us your testimony that, oh, I finally passed and so shall it be. So let's proceed. Thank you, everybody. Let's proceed. Let's proceed to question number 2. So I can now unmute now so that people will not disturb the class. Let me unmute everybody again. So after that, we will proceed. So this question number 2, we can see this one, they give us financial statement of a particular organization. Let's read through. It said, statement below is extracted of property, plant, and equipment from note to the financial statement of ABC. These are the figures, and we have land and building and office and equipment, furniture and fittings, and motor vehicles. They have 4 assets. This is the figures they're in, all figure systems. So this is where we are going. Instead, the above. So let's go. Let me read. Instead, the above was the situation of the financial statement, financial position of the organization, of the company, when it was signed at the board of directors meeting. During further review to sign off the audit file, it was discovered that the classification of some assets as impaired was due to wrong classification. The value had actually increased due to new road network in the location. This affected the impairment loss for the year. The new value of the building affected and shown in the note above available for market survey had actually grown to 8.5 million within the period under review required. Evaluate the different type of review, the purposes, and the scope of review. This is 10 marks. This is a lot. Number 2, discuss the necessary information to be included in the audit checklist based on information above in relation to what? IS 15, which is on property, plant and equipment, and IS 30, which is on 33, which is on impairment of assets. While number 2 is advice on the treatment of issues raised in regard to wrongly classified assets. So, in this situation now, they said that the company, they gave us the PPE, and they said that above the information. So during the process now, the review now shows that the classification of the asset was wrongly what classified. So they now ask us now the type of audit review. The question is direct here. They are talking about the review. That is, they want us in this scenario is actually telling us that because there is no proper review of that aspect of this particular financial statement. That is why the asset and the impairments of that asset is wrongly classified. Abi? So they now want to tell us that if the account is properly reviewed, they will look at the impairment of that particular thing is wrongly classified. So they will have classified it if they done proper review. So because they not do proper review, that is why this thing is still showing. So they now want to tell us now as the professional now, that as the professional now you are in charge now, and you find out this thing. What will be your response? That they are not telling us to take the different type of audit review, the purpose and the scope of the review. So what we need to do is to give them the meaning of audit review. So by doing this, it will enhance uh, our professional judgment, and also gives this the confidence of the of our confidence that we actually know what we are doing and what we are about to say. So now, what is audit review? We need to give them the meaning of audit review. So I will give us the meaning of audit review. Then we will now say the type of audit review that we have. So now, audit review in a short time can be defined as the process whereby an auditor evaluates the quality and accuracy of audit engagement in order to ensure that it was conducted in accordance with audit standards and the report is supported with sufficient evidence. I would say it again. Audit review can be defined as the process whereby an auditor evaluates the quality and accuracy of an audit engagement to ensure that the audit was conducted in accordance with auditing standards, and that the audit report is supported by sufficient evidence. Please, do you understand? Please let me see your emoji if you understand, or I should take it again. Okay. Mr. Mohammed, you don't understand. Let me explain again. Now, audit review. Audit review. Audit review have to do with, if you remember our practice management, when we talk about quality control, this is the same thing as audit review. In fact, one of the type of audit review has to go with quality control. So I'm saying it again. Audit review is the process, or can be defined as the process, whereby an auditor evaluates the quality and the accuracy. You evaluate the quality and accuracy of audit engagement so as to ensure that the audit is conducted in accordance with what the audit standard, and the audit report is supported with appropriate or sufficient evidence. That is audit review. Then you can also say that audit review, as you take it again, I will. You can have two different, I'm going to give us two definitions. Let me say it again. Audit review can be defined as what? A process whereby auditors evaluate the quality and the accuracy of what of audit engagement in order to ensure that the audit is conducted in accordance with audit standards, and that the audit report is supported with uh, sufficient evidence. You can also say that audit review can be defined as what as process whereby auditors evaluate the quality and accuracy of audit engagement to ensure that the company adheres with the regulatory standard, then to also identify the potential risk and area for improvement in an organization, and to also verify the compliance with audit standard and regulation, and that the audit report is supported with appropriate audit evidence. I'll take that question, another one again. I said audit review is the process where an auditor evaluates the quality and accuracy, that is the keyword there, quality and accuracy of audit engagement in order to ensure that the account is prepared and address is prepared and in compliance with regulatory standard, that the account is prepared to identify any potential risk associated with the business and suggested area of improvement, and also to verify the compliance with audit standards and regulations, and that the audit report is supported with appropriate and relevant evidence. You can see the difference between the two definitions. So if you don't get one, you get one. But I want to be let me not say it in a conclusively. Audit review can be defined as a process that auditors use to evaluate the quality and accuracy of audit engagement generally, in order to ensure that the audit is prepared, or the audit is conducted, or the account is prepared and presented in accordance with regulatory standards, and that the audit evidence is supported, that the audit report is supported by appropriate evidence. This is what I'm saying. It's like I'm just giving definition. Let me explain that part. So we said audit review is the process whereby an auditor evaluates the quality and accuracy of audit engagement to ensure that the account is prepared and presented in accordance with audit standards, and that the auditor's report is supported with an appropriate, relevant, and standard evidence. That is audit review. Please, do we understand now, my dear professional colleagues? Do we understand what we refer to as audit review? Please, if you understand, let me see your emoji. Thank you, thank you. So now, back to the question. The now said we should evaluate different type of, as if you say it again, how about now? I will say it again for the last time. Audit review can be defined as the process whereby an auditor evaluates the quality and accuracy of an audit engagement in order to ensure that the financial statement of an organization is prepared and presented in accordance with regulatory standards, and that the auditor's report is supported with a standard and is supported with a standard and sufficient evidence. That is audit review. The essence of reviewing this audit is to ensure quality control, is to ensure that the account is prepared in accordance with regulatory standards and the supporting document to be presented is material enough to form an opinion that the financial statement is of true and fair view and is free from material misstatement. So, having Julius, I hope you understand now. Madam Julius, rather, I want Miss Julius as the case may be. So, having to give them the meaning of auditor's report, audit review. So, the left is to, you want to continue now say that the following are the different types of audit review, the purposes and the scope of the review in relation to ABC PLC. I think the name of the company is ABC PLC. Let me see. Yeah, ABC PLC, I'm correct. So after the designation, the next thing to do is to the next thing to do after the definition, you now said that the following are the different type of audit review, the purpose and the scope of the review in relation to what? To ABCPLC. You will now list the type of audit review that you know before you now start to explain. So the type of audit review that we have, what are the type of audit review that we have? We have So we have different type of audit review. We have monitoring review one, we have audit review, we have peer review, and we have engagement quality control review. So the engagement quality control review is the one that relates to traffic management that I mentioned before on quality control. So let us examine this audit, these different type of review. They are very, very simple. They are very, very simple. They are very simple and straightforward. I said number one is monitoring review. This is sometimes called code review, or it is a peer review performed by what? Performed after the audit report has been signed. Let me say, I said it's very, very simple. Monitoring review. A monitoring review is sometimes called code review. That is, this is a type of peer review that is performed after the audit report has been signed. However, this code review form part of the monitoring quality control procedure. I said we have four types of audit review. We have monitoring review, we have audit review, we have engagement quality control review, and we have peer review. I start with monitoring review first. I said monitoring review is sometimes called code review. This is the type of audit review that is conducted after the auditor's report has been signed. That is, it is also part of what monitoring control procedure. That is monitoring review, which is code review. Now, audit review is similar to engagement quality control review. The main difference between audit review and engagement quality control review is that the audit review is normally performed on second opinion to monitor the new partner or majorly the account of non-listed company or PIE. I've mentioned the meaning of PIE before. The meaning of PIE is public interest entity. That is the company that is rendering service to the what? To the public. We have MTN is public interest entity. SWIFT is public interest. Any entity that render professional services to their clients, they are public interest entity. So audit review now. So audit review is a type of review that is performed or that directly required by ISPC 1. That is, it is performed to ensure that audit work is performed in accordance with regulatory standard. That is audit review. I'll say it again. Audit review is type of review that is conducted to ensure that the account is prepared and presented are all audited in accordance with what? With relevant audit standard. That is audit review. Now, engagement quality control review. We said this is the type of peer review that is performed for the audit report is signed and which is as required by international standard of what? On quality control. One, I said engagement quality control review. This type of peer review that is performed before what? Before the auditor's report is signed and it is required by international standard on quality control, which is ISQC 1. Then the last one is peer review. This peer review is a type of review that is carried out by another firm to ensure that the account is accurate and what and to ensure that the account is of ICT and accurate and the account is prepared in accordance with international audit standard. So these are different type of audit review that we have. So I'll mention it again. Please, any question? Do you understand the way I explain it, or I should take it all over again? Let me quickly summarize that one. Peer review. Let me start from peer review. Okay, some people don't understand. This is Okpayemi and like you don't understand. Peer review. We said peer review is a type of review. Excuse me. Peer review is a type of review carried out by another audit firm on the financial statement prepared by what? Prepared by the management or by an auditor to ensure that the account is accurate and the account is prepared in accordance with international audit standard. That is peer review. But it's majorly carried out by what? By another firm. Now, engagement quality control review, which is number 2. The engagement quality control is a peer review. It's an aspect of peer review that is performed before the what? Before the audit report is signed to ensure that the audit work is accurate and is prepared in accordance with international standard of audit. That is engagement quality control review. That is, it is a peer review that is performed before what? Before the auditor before the audit report is signed to ensure that the account has enough quality and to also make sure that the account is prepared in accordance with international standard of what? Of audit. That is engagement quality control review. Now, the audit review. He said the audit review is a type of similar to what? To international to quality control review. It's just that the audit review is now type of review that is conducted to ensure that the organization get the maximum quality of control in engagement of audit. That is, I'll say it again. The audit review, this is a type of review and it is similar to engagement quality control review. Then when I said that audit review is a type of review that is conducted to evaluate the quality and accuracy of audit tests in auditing the financial statement of an organization. That is audit review. While the last one, which is what? The last one I said is monitoring review. He said we can also call this one as what? Code review. We now said this is a type of peer review that is conducted to ensure quality and to evaluate audit quality and what? To evaluate audit quality and accuracy when the auditor's report has been what? Has been signed. The monitor review type of review that is conducted when the audit report has been signed. The audit review is the type of review that is conducted to evaluate the quality and accuracy of what? Of uh, of audit engagement. That is audit review. While engagement quality control review is the type of review, is the type of peer review that is conducted to evaluate the quality and accuracy of the audit engagement before the auditor report is what is signed. While the last one is peer review. The peer review is the type of audit review that is conducted by another firm to evaluate the quality and the accuracy of audit engagement and to ensure that the engagement is in accordance with international standard of audit. So these are the types of audit review that we have. We have audit review, we have a monitoring review, we have engagement quality control review, and that peer review. Now, to substantiate everything, they said we should talk about the purpose and the what and the scope. So, what are the purpose of review of audit review? One of the purpose to carry out audit review was for to ensure that the account the audit engagement is the to ensure that the engagement is in line with what international standard of for what of audit, or to ensure that the audit work was carried out to proper professional standard. That's one of the purpose of review. That is, another purpose of review is to ensure that the audit evidence is properly supported with appropriate evidence. That is, the audit evidence is relevant and accurate, and it is supported with appropriate evidence in order to form an opinion whether the financial statement is of true and fair view. That is another purpose of review. Another purpose of audit review is to ensure the quality of audit engagement, so as to ensure that the account is prepared and audited by what by the account prepared by the management is of fair view, clearly presented, and free from material misstatement. That's another purpose. Another purpose of audit review is to help on the accuracy of financial statement, thereby the management can place reliance and help the auditor to form an opinion that the account is clearly prepared in accordance with regulatory framework. That's about 4 purposes of audit review. Now, let's go to the scope. What are the scope of this audit review? One is appropriate. One is proper audit planning. It is through proper audit planning we can establish how we are going to have good quality audit or good quality control on our audit. So one of the scope is proper audit process. Another one is proper audit procedure, and proper audit procedure, which has to do with audit test, which has to do with compliance, which has to do with audit test, the compliance, and the documentation. So the the last review there is whether the conclusion has reached the content of what we okay. I think I've mentioned this. Okay, I mentioned this in the purpose before. So the last scope there is to ensure that the audit is to ensure that the audit has reached the consistent conclusion in order to place reliance on the financial information and to also give an opinion on the financial statement. So these are the scope. The scope now, one of the scope is the proper audit planning. The second one is proper audit procedure. The third under the procedure is to make sure that there's proper documentation of audit evidence to make sure that the work is performed in compliance with regulatory standards and to also cover the audit test. So those are the audit procedures. Then the last one is to ensure that the audit is has reached consistent work evidence so as to support or to help the shareholders to place reliance on the opinion given by the the opinion given by the auditor to ensure that the account is accurate and relevant. That is the scope of audit review. Please, can I any question general? Let me just please you can ask your question now. Let me quickly turn off the microphone so that we can ask our question. Please, any question here, please? Any question? Let's ask. Okay. Someone said the scope. Now, we talk about someone. Can you take number 3 again? Which one is number 3 again? Now, I'll still say it again. We've already talked about the type of audit review. Now, the second one is the second one is the purpose. So, what are the purpose you have mentioned? The purpose of audit, the purpose of doing review is number one to make sure that the audit work is carried out in proper professional standard. To make sure that to make sure that the work is carried the work carried out during the audit work and the audit evidence are substantially and well documented for easy reference. That's another purpose of audit review. Then another one is to ensure that the account is prepared in accordance with regulatory framework and so as to place an opinion or so as to place reliance on the financial statement or on the audit report that the account is of true and fair be and free from material misstatement. That is another purpose. Now, let's go to the scope. So what are the scope? The scope is in what way can we ensure that we have good audit review? One is through proper audit planning. That is, if we plan our audit very well, we are going to have a good audit review. Thereby, it's going to help us to boost our to evaluate the quality and accuracy of audit engagement. That is one of the scope. The second scope is proper audit procedure. So one of the proper audit procedure is through audit documentation, through audit checklist, through audit test, through compliance with audit program, and through resolution of problem encountered through during the audit. So those are the scope. So those are the audit procedure as one of the scope of audit review. While the last one there, which is very, very important, one of the scope is to ensure that the audit review is inconsistent with to ensure that the audit review is inconsistent with audit evidence, that the audit evidence is accurate and it is relevant to financial information. So in order to form an opinion, if the financial statement is of true and fair view and free from material statement. Please, any question again? Okay, I hope your question has been answered. Please, if, if you are still enjoying the class, please let me see your emoji so that I can proceed. You are getting there now. You are getting there. So 1B, they said we should talk about audit checklist on what? The audit checklist on aspect of on IS 16, which is PPE, and also IS 36, which is IS 36, which is impairment of what? Impairment of assets. So, what is audit checklist? Audit checklist. Audit checklist can be defined. So I will take it slow so that we will not waste our time. We take our time this night. Audit checklist can be defined as a tool used by an auditor to ensure that all necessary steps and procedures are performed during audit engagement. I will say it again, and I will give us real and typical examples. Audit checklist can be defined as a tool used by an auditor to ensure that all necessary steps and procedures are performed during audit engagement. So I'll say it for the last time. I said uh, so I'll say it for the last time. I said audit checklist, sorry, is a tool used by the auditor to ensure that all necessary steps and procedures are performed with during an audit engagement. So this is an example that I want to find. For those of us working an audit firm here, for those of us working in an audit firm, and the audit checklist, okay, generally audit checklist is any guideline you follow to ensure that all necessary steps you need to take in arriving at a conclusion that a particular transaction is okay and it is good for audit purposes. That is what they call audit checklist. Please, can you hear me? Hello, please, if you can hear me, please let me.
Yes, sir.
Okay, thank you. So, audit checklist, as I said, as I explained now, I said it is any procedure, any step that you follow to ensure that a particular transaction is good for audit purposes. Any procedure that you use to ensure that all the transactions that you pick for audit purposes are passed through the whole procedure before you cannot ascertain that the the transaction is good and it is free from error. That is what we call audit checklist. Please, do we understand the meaning of audit checklist? Let me see your emojis. You understand the meaning of audit checklist? Generally, audit checklist is anything, any procedure you can use. Like for example, now if I pick a transaction under expenses, what are the audit checklist under expenses? First of all, we check the accuracy to make sure that the amount is the same thing as what is important in the trial balance. Another audit checklist for expenses is to trace to supporting documents and bank statements. If you pay a customer now, or if you pay us an expenses, where is the invoice you raised before the money is moved out from the what? From the bank. So that's another audit checklist. You make sure that this thing does it relate to that particular financial year. If you ensure that if you You now find out that it relates to that financial year, then that found out this checklist on that side. You now make sure that did they actually classify these expenses where it's supposed to be? Is it supposed to be under expenses? True. When you have ascertained that it's under expenses, then you have satisfied the audit checklist there. So generally, audit checklist is the procedure that you follow to ensure that every transaction is perfectly okay and it is good for audit purposes. That's what we call audit checklist. So let me quickly take Mrs. Benita question and Mr. Siri. So Benita, please, your question, please, you can ask. Please, quickly, so that I can proceed. Hello, she's not there again. Now, Mr. Siri. Hello, are you listening to me? Please, can anybody hear me? Please let me see your emoji if you can hear me, please. Okay. Okay, good. That's good. So, okay, let's proceed. So that is audit checklist. So the now said, I've given us the meaning of audit checklist. Now the now said to discuss the necessary information to be included in the audit checklist based on the information above in relation to IAS 15. So if we want to answer this, we said the following are the necessary information to be included in the audit checklist based on the information above in relation to IAS 15, which is property, plant, and equipment. So what are the audit checklists for property, plant, and equipment? As I explained the meaning of audit checklist now, all of us supposed to know what we need to check for under property, plant, and equipment. So for audit checklist or under property, plant, and equipment, first of all, we need to recognize the cost. That is, as the cost determined in accordance with IAS 16, they may follow the normal the ways of recognizing cost for PPE. Is it through cost method or evaluation method? So first of all, one of the audit checklists for PPE is to ascertain that the cost is determined in accordance with IAS 16. One of the audit checklists is to also ensure that the deviation has been properly calculated and accounted for. That's number 2. Another one of the audit checklists is to ascertain that if the asset has been disposed and whether it results to gain or loss, if it has been properly calculated and recorded in the financial statement. That's another audit checklist, which is number 3. In the aspect of post-acquisition expenditure on property, plant, and equipment, it also needs to ascertain if it is properly analyzed between the capital expenditure and revenue expenditure. That's number 4. And number 5, to also ensure that if the cost has been properly allocated to the component of assets in accordance with what with IAS 15. That's another audit checklist. Another audit checklist for property, plant, and equipment is to also ascertain if the asset was purchased or within the financial year, within the year under the year. That's another audit checklist. So we have many audit checklists as far as you can think of the more you can think that, oh, this thing is in front of me. What are the things I can use to ascertain that, oh, this transaction has passed, and I can place reliance on the figures that, oh, I've already satisfied that everything that I take here is correct and it has passed my test, and I can now see that my audit checklist has been completed on this particular transaction. So they want to see that if this thing is right in front of us. Now, what are the things that I can pick here that will make me to back that, oh, these property, plant, and equipment are good to go. They are good. I've ascertained that the figure represented property, plant, and equipment is clearly what recorded. So that is where the aspect of audit checklist now comes in. So what are the audit checklists for property plant and equipment? I will take it again. Number one is to ensure that whether the cost has been properly determined in accordance with what with IS16. Then number two is to ascertain if the cost has been correctly allocated to the components as regard to IS16. Then number three, to ascertain if the depreciation has been properly calculated and accounted for. Then number four, then we should ascertain if there is disposal of the property, plant and equipment relating to resulting to resulting to how do I put it? Resulting to the disposal gain or loss. Is resulting to gain or loss on disposal, and if it is properly calculated and and recorded. Another audit checklist is to ascertain that the property, plant and equipment in question is related to to particular financial year under review. So these are the ways, or these are the process that we can use to check to do our audit checklist on property, plant and equipment in accordance with IAS 15. Please, do you understand that one before I move to implement of assets? Please let me see your emoji if you understand. But if you don't understand, please type it on the chat box so that I can pick it up. Hello, please, can anybody hear me? Okay, good, perfect. So let's do it. Okay, so let's take the audit checklist again. Now, they said we should ascertain the audit checklist in accordance with IS 15, which is property, plant and equipment. That is, on property, plant and equipment, what will be our audit checklist? That is the meaning of what they ask us here. Number one, based on your understanding of audit checklist, that all the tools that you use as an auditor to ensure that transactions are passed through audit tests and they can place reliance on the figures reported in the financial statement. That is what we call the audit checklist. So now, in accordance to IACC, what will be our audit checklist as an auditor? Number one, to ascertain if the cost of the asset is in accordance with with IACC. That's number one audit checklist there. Number two is to ascertain that the cost has been properly allocated in accordance with IACC. That's another audit checklist. Another audit checklist can be used is to ascertain if the depreciation has been properly calculated and accounted for. That's another audit checklist. That's number three. Number four, another audit checklist is to ensure if the asset is disposed to ensure that gain or loss on disposal is properly calculated and recorded. Then another audit checklist is to ascertain ascertain the asset if it is to ascertain and properly categorize the asset if it is if it is between capital expenditure and revenue expenditure. Then another checklist, which is that's number 6, is to also ascertain the evaluation being performed in accordance with IS 15. That's the evaluation of assets. If the evaluation of assets they perform is in accordance with IS 15, then another audit checklist can also check is to ascertain if the amount reported is in relation to the financial year under review. So these are the audit checklists to check as an auditor when you are conducting a review on property, plant and equipment, which is IS 15. Now, the other one is to impairment of assets. which is IS-36. What is the audit checklist in the IS-36 implement of assets? So now the audit checklist, first of all, is to what? Is to, where appropriate, is to have cash generating unit has been identified, is to ascertain if the cash generating unit has been identified. So let me just clean this first of all. What is impairment of assets? An asset will be impaired when the carrying value, that is the fair value, when the carrying value is more than recoverable amount. That is when the amount, when the worth of an asset now is more than what the amount you will get when you later dispose the asset. That is what we call impairment of asset. That is when you have realized that the carrying value, which is the market value of an asset, is more than the recoverable amount. That is when you realize that the carrying value, the market value, is more than the amount the asset is data sold in the market. That's where the asset will be impaired. So now the audit checklist there is not much. One of the things is to ascertain that cash generating unit center has been identified. So I know you're supposed to ask me what is cash generating unit in regard to impairment of assets. You are not asking me. So, but I need to tell you, cash generating unit. So how can I even relate cash generating unit that will make it simple? So cash generating unit, cash generating unit, cash generating unit, cash generating unit. Let me see. Okay, I think cash generating unit, as we used to say, is the smallest identified group of assets, which is independent cash flow and can be identified and measured. Cash generating unit is the smallest identifiable group of assets for which independent cash flow are generated, identified, and measured. I will say it again. Cash generating unit is usually come about in increment of assets. We said it is the smallest identifiable group of assets, which is independent cash flow, which can be measured, identified, and generated. That is cash generating unit, CGU, in accordance with what IAS 15. So one of the audit checklists is to ensure that, is to ascertain that the cash generating unit has been identified. And one of the audit checklists is to ascertain that the recoverable amount has been calculated in accordance with what? With IAS 36. Then is to ascertain that asset will be impaired when the carrying value is more than the recoverable amount. You cannot just impair the asset when you know that the recoverable amount is more than the carrying value. So our audit checklist is to ascertain that the carrying value of the asset is definitely more than the recoverable amount before we can now treat the assets to the impairment of assets in accordance with IAS 36. So these are the two audit checklists for IAS 16 and IAS 36. Please, if you have any question, let me know. If you understand that you want me to proceed, please let me see your hand so that I can proceed. Okay, thank you. I hope we are following. So we'll stop at this question number 2 because I know some people are tired and because of the time that we waited, almost 30 minutes that we waited, that is why I moved the class towards this time. Normally, I love asking questions very well, but because of the time we wasted last year a lot, and we are unable to substantiate everything correctly before we end the class. So that is why we are unable to finish that. So let's proceed. Once this is said, more explanation on IS-36. I'm not written standard here now, but I will explain IS-36. IS-36 is impairment of assets. How are we going to know that an asset needs to impair? An asset can be impaired when you have concluded or when you have ascertained that the carrying value of an asset is more than the recoverable amount. What is the carrying value or fair value? The carrying value or fair value or market value is the same thing. That is the price of that asset as at now. So what is now fair value? The fair value is the amount at which assets can be sold or liability settled between a market participant in an orderly manner of transaction at a measurement date. That is, amount at which asset can be sold and liability settled. That is, amount at which asset can be sold as at now. That is the carrying value. So the now said an asset will be impaired when the carrying value is more than the recoverable amount. So what is the recoverable amount? Recoverable amount is the amount at which assets will be sold at the end of its expiration useful life. At the end of its useful life. So when the carrying value is not more than the recoverable amount, that is when the amount of that asset at now is more than the amount that the asset will later be sold, that is where they can repair the asset. So under that we have CGU, that is small cash generating unit, and recoverable amount can be higher of value in use and net realizable value. Higher of value in use and or net realizable value. Any of the two will serve as your recoverable amount. So that is the little thing I can say about IS 16. I hope I'm able to answer your question to some extent. Thank you. So, okay. So now, let's quickly treat the next step. We should advise the treatment of issue raised in regard to the wrongly classified asset. So now, you know that the asset needs to be impaired. What is now the impairment of asset? Now, I've already mentioned it in the beginning of this class today, but I'll say it again. Impairment of asset. Impairment of asset is an asset that has a market value less than the amount reported in the financial statement. I'll say it again. An impairment of asset is an asset that has its market value less than the amount reported in the financial statement. This is what we are seeing in essence. Instead, an asset becomes an impairment asset when the market value, that is the value now of the asset now, is less than the amount they reported in the financial statement. This is a typical example. The market value of a fridge now or of an asset is 20,000 naira, but they now reported 50,000 naira as the worth of that asset in the financial system. It means that that asset is an impairment asset, is an impaired asset. The asset has been impaired. That is why the market value is now less than the amount they reported in the financial statement. Please, do you understand that explanation? Everybody, please. Did you understand that one? Thank you. So now, in this aspect, the last said we should advise. We should advise with regard to the wrongly classified asset. Please, if you are working in an audit firm here or as an accountant, please let me see your hand. Okay, let me ask this question. Can anyone tell me in the aspect of when transaction is wrongly classified, what are the best things to do? First of all, what are the things we need to do if an asset is wrongly classified and we want to correct it? What is that particular thing we are going to do? Anybody? Please, can you hear me? Am I audible enough? Yes, this is Olajumoke said, we pass and
Yes, sir.
yes, you are going to raise the journal to correct the error. You are going to raise the journal. So in this situation, we are going to raise the journal to correct the situation. So now, how do you now raise the journal? It's just to correct it. How do you now raise the journal? Let's check the amount incurred in the financial statement so that we know that we are picking the correct figure. So in the financial statement on PP, increment of assets. So now, for the year, which year are we? Okay, increment of assets on building. Increment loss, there is increment loss of 5,267,000, 267,533. So how do we now correct this thing? So the appropriate audit journal to it is to debit our PPE account, with 5,267,533 and credit impairment account with the same amount. So for the left class of assets, you also debit that PPE of 6,022,713 and also credit the impairment loss account with the same amount. Then to the last one, you also debit 11,290,046 from PPE and credit towards impairment loss account with the same amount. With that, we have already declassified the account that was wrongly classified. So with that, we have substantially classified correctly the impairment of assets that was wrongly classified. So with this, I think it is important for us to stop here. Please, any question generally? I think I have so you can ask question and everybody can complete and ask question. Please let
Hello, sir. Which past question did you use, sir?
Sorry?
The past question that you are treating now, which past question? What's here?
24. May 2024.
Excuse me, sir.
Please let us take it one after the other. They have a question. Please let's put on our hand so that I can call you. Then we can now talk. Let me see on. Okay, Mr. Kayode or Mr. Kayode, anyone? I don't know. Tell me, Kayode, please, you have the floor. Please ask your question. Okay, Mr. Libukon, please, your question.
Good evening, sir. Hello, sir. Hello.
Hello, sir.
Hello, sir.
You say you are using May 2024 for the past question.
Yes. Hello, sir.
I can hear you now.
Okay, sir. Thank you. Sir, I just want to ask as regards this thing, where is it? The C part of that question too, that's the treatment of the issues regarding the wrongly classified assets. Is it that to answer that question we are going to illustrate it in a journal entry, or we just need to explain that this thing, explain the correction or indicate it via journal entry? Thank you, sir.
How you are going to answer it? you say that you say we are going to advise the treatment of the issue. You just start to answer that this asset, this situation is as a result of impairment of assets in quote. You now put in bracket impairment loss. You now say, however, impairment of assets, impairment impairment asset, impairment asset. That is, impairment asset is an asset. Impairment asset is can be defined as an asset where the market value is less than the amount reported in the financial statement. Full stop. So to now reclassify this asset, to classify the asset that was wrongly classified, the best option is to raise an adjustment journal, and the following are the necessary adjustment journal to correct the wrong classification. You know there are three sets of assets there. So number one, you just write one. Debit, number one, what's the name of the asset? Maybe motor vehicle. You now said, for example, under motor vehicle, the impairment classification treatment is debit PPE account and credit impairment loss account. Then you are done with that one. Number figure two, you pick of the asset, you pick the assets again. Maybe plant and equipment. You said under plant and equipment, the proper classification is debit PPE account is the amount and credit was impairment loss account with the same amount. You are done with that one. Then you go to the C. Under functions and fixing, the proper classification of the asset is debit what the PPE account, which is function and fixing as the case may be, and credit impairment loss account. That is how to do it. Then you are good to go. Because it's 3 marks, you are not expected to now be drawing journal and be telling them this one and that one. Do you understand? You still have another place to another question to answer. So don't waste your time too much. Since you know what you're supposed to write it and make it detailed enough and move on to the next question. This is Obukun. I hope I've answered your question now.
Yes, sir. Thank you, sir.
So, Mr. Kemi Kayode, I don't know whether you're a man or a woman. Please, are you with us so that you can ask your question?
Yes, sir. Sir, you are saying that we can summarize the topic. You say you will give us the techniques to summarize all the topics, because the thing is voluminous somehow, and I don't know whether you can still do that, sir.
You mean, okay, do you mean chapter review?
I mean the general topic, everything that you can say, okay, this is how you can summarize it.
I don't understand your question. Do you mean the topic in AA, or it's peculiar to the question we just answered, or on each chapter?
No, I mean the AA as a whole, sir.
And now that is chapter review now. That is chapter review. And
Okay,
that one,
sir.
okay. Okay, that's your question. Let me see if we can.
And also, after today, is there any revision day again, sir?
Yes, there
according
is.
To the schedule.
Next week. Is next week. So we can do chapter review.
Okay.
Let's ask another person.
Okay, sir.
Uh,
Thank you, sir.
This is Oluwakemi, your question. This is Oluwakemi, are you there?
Yes, I'm trying to, I didn't get the C part, how you did the reclassification.
When Mrs. Ibukun asked now, I've already mentioned it before, and that was the question she asked, and I still explain again. She actually asking me to still explain the process again. Okay, I will explain. So now, because it's the same question that Mrs. Ibukun asking, and I'm sure you raised up your hand when she asked me that question, and I even took my time to explain again. So if you want to answer that too, the best thing, because he said is an impairment asset. So you need to teach them the meaning of impairment asset first. So an impairment asset is an asset when the market value, that is the fair value, is less than the amount reported in the financial statement. That is the market value of an asset. That's why I said the market value of an asset, for example, is 20,000. They now recorded 60,000 naira in the financial statement. It means what? The asset has been what? The asset is an impairment asset. So in this situation, how do we correct the wrong classification? The proper way of correcting the wrong classification of any transaction is to raise an adjustment journal. So you now said the following are the way to raise the adjustment journal on the three classes of the assets reported in the what, in the extract or in the yes, in the draft account given to us. You now said we must go on. You name the asset under function and frequency. The proper way of classifying the asset is to what? Is to debit the motor property to debit the motor vehicle account, for example, and credit impairment loss account. You are done with that one. Pick number figure 2. What is the name of the asset? Function and frequency. You now said under function and frequency, the proper way of classifying the asset is to what? Is to debit function and frequency account and credit impairment loss account. You are done with that one. Number 3, what's the name of the asset? Plant and machinery. You now said the proper plant and is to what? Is to debit plant and machinery and credit impairment what? Impairment loss account. So with that, I'll be able to use an audit adjustment to now properly classify the asset that was wrongly classified. That is how to answer that. Do you understand now, ma? It is Oluwakemi.
Yes, sir.
Okay, thank you.
Thank you, sir.
Any other question?
Mr. Idris, I don't think we should accommodate any more questions. This past 12.
Okay.
So every other question should be taken to the group or wait till next class. You can end. You can stop the video, the recording now, and also the transcription, and end the class for everyone.
No problem.
So just go up and stop the vote.
Okay.
Let's see.
No worries. So
thank you all, guys. Good night. We'll keep the group open. You can ask your questions.
And
we attend to them via chats.
Tell me that you ask if you can help with chapter review.
Sir, please, when are you dropping the recorded video, please?
It would be, the recording is not instant. It processes after each class. So by tomorrow morning.
You get money. So for the chapter review, I'll try as much as possible. Maybe I will write short this thing on what we tend to see in every chapter and how to go about it. But that's why we have our summarized note. There's a first note that we summarize that in this chapter, this is what you are going to see there, and it is summarized there, very, very simple and straightforward. So you don't even need very expecting to take chapter review, but for the sake of the class, I'll just do the overview each chapter.
So you can still do it because even the summary I have is still plenty also. But if you can have short notes something, it will see the way you are mentioning some topics, I mean, and the definitions, and some that are very important to the to pass the exam, please. Thank you, sir.
And you cannot beat the corner to be a professional. You have to. In fact, there is no advantage to write this sort of definition in professional class because you need to convince the marker that you actually know what you are writing. So I cannot just ask you, for example, now, what is audit report? I just give me it's a written document by an auditor to give an opinion on the financial. That was definition. You do not want to compare your mark with someone that said audit report can be as a written document issued by an auditor to the management of an organization on an opinion form on the financial statement prepared by the management to that the account is of view, that the account is fairly presented, and that the account is free from material misstatement, and that the account is prepared in accordance with international the account is prepared with regulatory framework in order to help the management to make prompt decision. You know that the two definitions are two different things. This one can fetch you 5 marks and that one can fetch you 2 marks. So, and in your own way, you say, they ask me what is the audit report, and I give them the meaning of audit report. So you're not the wondering that how come this one I got 5 marks and I got 2 marks? It's because your definition is not substantial enough, and that is why you're in professional class. So anything that you want to use court corner that I'm looking for such a definition is not advisable, but I will try and see what we can do. Please, because that's why you have the summarizing. Because instead of reading the whole big study part, you have the summarizing for you to read. That instead the study part can carry like about 10 pages. We summarize it to 3 pages for you, so that for you to read and understand. So anything less than that is not advisable in this class, man. So just try and understand each chapter. That this chapter, this is what we're talking about. What I wanted to do is the chapter review that this chapter 1 is talking about the meaning of audit, the assurance, gives them to small what you understand by audit, and if you move to chapter 2, chapter 2 talks about the regulatory framework that you can use to prepare and audit your during the audit engagement. You go to chapter 3, talks about the auditor's independence and the threat to auditors independence and the safeguard to auditors independence. Chapter 4 talks about the auditor's liability and the like. Chapter 5, the practice management on quality control, what we can do to have good audit engagement. Then chapter 6 as that like that. Chapter 7, the practice the audit planning. Chapter 8, the audit evidence. That is the overview you're supposed to be asking for, not the short question mark. It's not advisable, but on that overview, I'm going to try. And last week I said, from experience, I can use to test majorly. The major question will normally come from chapter 5 to chapter 14. Chapter 5 is on quality control, practice management. Chapter 6, I can't remember the chapter 3, but 7 is on audit planning. Chapter 8, audit evidence. Can't remember chapter 9. Chapter 10 is about group audit. Chapter 11, assurance services, as the case may be. Chapter 13, 12, sourcing. Chapter 14, maybe audit report, as the case may be. So that is number majorly from chapter 5 to chapter 14. That's where I can use test questions very well. So we need to also put that one in mind and read very well. So this is where we are going to end the class for today. Thank you everybody for listening. Thank you so much. So please let us endeavor to read our book very well. We have this weekend to even at where we are choked with many lectures in our various courses. But seriously, let us create that time to read and perfect our work. Thank you so much. Thank you everybody. You have a wonderful night. Thank you.
Thank you, sir.
Thank you, sir.
Thank you, sir.